us. Good morning, Kanal, as well as Ashish. First, let me wish both of you and your families festive greetings. And let's talk about Samvat 2077. What a year it's been for benchmark indices, as well as for almost all of the sectoral indices, ending this Samvat on the positive note. Kunal, I'll come first to you. Which were those outstanding stocks for you in Samvat 2077?
Good morning, Shell. Good morning, everyone, and again, festive greetings to you as well as all the viewers of ET Now. Now, in terms of the last year picks, there was some very fabulous kind of stock picking which is fortunate enough to gain. One of them specifically was Tata Motors. The stock did exceptionally well. Now we've seen the majority of the rally coming out for Tata Motors in the last 1 month, but I've been very bullish on the stock right from the time when it was at 108, 110 rupees. That was just about in the fag end of the previous year 2020. So that's been one of the strongest pick and strongest outperformer. The other stock where I've been very bullish from the IT pack, and it's not the traditional large cap names. It was Wipro where I was exceptionally bullish on. So I think that stock as well has done exceptionally well. I think I started recommending the stock when it was at 325, 330 odd levels. And from there, the stock has not looked back, and it's been one of the stronger outperformers from the pack. Now, going forward, I would be continue to be bullish on Tata Motors, but then there would be two other names which I would want to recommend. One of them is Z Entertainment. I think this stock looks exceptionally strong. Now we've seen what's happened to Z in terms of stock price movement, but traditionally what happens is that such kind of candlestick moves for Z takes the stock to a new regime altogether. So I believe from current levels someone could look at buying Z at current levels, and I think 400 could be a potentially good target for Z, which should be at least a 20% upside from current levels, and stop loss for that could be maintained closer to 250 mark. The third stock which I would be bullish on would be a bit of a high digit stock, but it's Bosch Limited. Now, classical chart patterns shaping up for Bosch. And I think at current levels, I would probably place an upside of at least another 15 to 20% further. That's a very modest kind of a target, but what I'm trying to indicate is that these stocks are on the verge of a big breakout. And I know those breakouts can last for not just another 6 months to 12 months, but they could be more of a longer term breakouts for these names. So Bosch, I would keep an eye of targets of almost 3,000 plus from current levels, so 20,500 as a target, and stop loss could be kept at 15,700 mark.
Okay, Ashish, I'm coming to you on your picks for the new Samvat. What are the stocks that you identified?
Well, I think the last 1 year has been pretty good and is amazingly better than even what was expected. So everybody has had a positive surprise on their portfolios. For me, there were three stocks which have delivered fantastic returns. I was bullish, but the returns were even better than what I expected. One of them was IEX, where I recommended at around 180, 200 levels. The expectation was 500, it touched 1000, and the company continues to be bullish especially after the recent correction, because it has the first mover advantage in a new concept called energy exchange. Volumes have grown very rapidly over the last 10 years. They're going to grow more than 4 times, and we expect this to continue as more and more traction comes in the energy exchange space. That is the one idea, and I think it's a valuation still after the correction looks comfortable. So I would still say that you can hold on and buy more on corrections. The second stock which delivered better than expected returns for me in the last Samvat was Max Healthcare. We bought it, we recommended and bought it at about 115, 120 levels. The expectation was and the target was around 200. It crossed 350, reached almost 400. Again, a very new concept because it's a private equity first hospital which is being controlled and managed by a private equity fund with KKR in the lead. Healthcare in India is set to really boom because of the very low base, and I think after COVID, the attention to healthcare has really gone up. So company is going to benefit on many fold. The rising number of people paying attention to hospitals, and the company itself is has a very rapid expansion plan and is now managing it very well under a very professionally run management. So though the stock has exceeded my target, I still remain bullish on it, and I think especially on a corrective phase now, with after having peaked at around 380 levels, I think on the downside it still represents a very good opportunity to add more. The third stock which again exceeded the expectations and is still looking good is Godrej Properties. We bought in and recommended at about 900 levels. The expected target was around 2000. It went to about 2500. Again, on a correction, looks very good because the company is one of the prominent players in the real estate market, has a very premium positioning. Their delivery model is very good, and any launch by Godrej Properties gets lapped up by investors and homeowners, home buyers very fast. They still have a very big inventory of land bank, and given their execution skills, the company still remains a very good buy. And what is very positive about the company is also the favorable industrial dynamics. The real estate sector seems to be turning around after a very long period of time. So the tailwind here would be very strong. So I think on both the counts, the company will do very well. Again, on any decline, one should add this stock and continue to hold on. I think the next year also looks very good. Besides this, there are three other stocks. Again, in the large cap space, which I can safely recommend. One of them is ICICI Bank. Despite the run up, I think the future looks very good because the corporate facing banks are going to do very well as the economy starts improving. And ICICI has gone in for a very massive change in the way they manage risk and the way they manage their loaning after the last time they had a lot of problem about 2 years back. And under the new management, under the new CEO, the bank has cleaned up their balance sheet in a big way, and the return ratios are really improving. So this is the re-rating in
Ashish,
this bank will continue. Yeah, sorry. And the other two are ITC and L&T.
Ashish, so sorry. Yeah, okay. So I'm sure we'll get more time to speak about these counters. Unfortunately, we're running out of time. Do stay with us though, Ashish as well as Kunal. We're taking a short break, but on the other side, we'll start taking queries. Do stay tuned.
Welcome back. You're watching Buy Now Sell Now on ET Now. We have our experts Kunal Bothra as well as Ashish Kapur, and we will begin with the queries. But just a quick note for both of our experts: do keep your answers short because we have a curtailed time limit for queries today, and we try to take as many as possible. First one is coming in from Shailaja, and she's saying she's holding alkyl amines from at the rate of around 4,233 rupees per share. Wants to know whether she should average or hold on to these counters or look to actually exit from them. What's your take on this one, Kunal? Alkyl amines. What should Shailaja do with this particular holding?
So I think you should hold. The stock is getting into a consolidation slash correction phase, and I think it's coming back towards its 200-day moving average. 30 to 50 is the 200-day moving average. Assuming if the stock comes back to that level, say over the next month or so, I think that could be a good level where you can look to average further, because that would probably decide or indicate that the stock price trends or consolidations have ended. So I would suggest a hold average at 200-day moving average, which at least at this point of time is at 30 to 50 levels.
Okay, all right. We've got the next question coming in from Kaushik Ghatak, who's asking for a mid-term view of Ashok Leyland. I'll come to you, Ashish, on this one. Commercial vehicle play, pure play commercial vehicle play. Would you suggest an entry at this price point for the next, for the medium term?
I think so. I think the problem with the auto sector has really been the shortage of chips, and so to that extent it has kind of underperformed in the very near term. But for an investor, clearly that is an opportunity because it's the sector is relatively underperformed, and even Ashok Leyland hasn't done really anything much for the last many months. The semiconductor shortage, I think, would get over at some stage, and so there is a lot of pent-up demand both in the commercial as well as in the passenger car vehicles. In commercial vehicles, especially, I think they would also get the advantage of the economic turnaround, which should happen once the COVID crisis is kind of getting over and economy is opening up. So on both counts, I think Ashok Leyland should be a very good opportunity for investors, and I think you should look at buying here.
Okay, staying with the auto space, this one is from Muthu Palani, and he wants to know what's your views on Bajaj Auto, Ashish. How does this particular counter look like? Do you think Muthu should look to invest in? If he hasn't, and if he has already invested, then should he stay put with Bajaj Auto?
Well, I think if he is invested, stay put because again the same story here. The two wheelers also are suffering. Firstly, because of the semiconductor shortage, and secondly, also because of COVID. The demand has suffered because usually a lot of two wheeler demand comes when people are going to offices or people are going to colleges. So last about a year and a half majority of the educational institutions and offices have remained closed. So that has kind of adversely affected the two-wheeler space. With this, I think getting over, and we are all positive that within a few months, I think this situation would change. With people entering into the job market again and offices opening up, and also institutions opening up, I think the demand would come back, and so to that extent, it's a good idea to stay. If you're already invested, to stay put with Bajaj Auto, and if you're not, then yes, use this correction to to buy into this stock because clearly the domestic market. Two wheelers would again, it's an underperforming sector, but we have historically seen that the demand here is very strong, and once it comes back, I think these stocks will get re-rated in a big way.
All right, I do want to point out that we're having a bit of an issue with the WhatsApp feed, and we're trying to resolve that. In the meanwhile, I'm taking questions from YouTube. Cheryl, I hope you forgive me. Sapna Samar is asking the next question. This is on the Bajaj twins. And Kunal, I'm coming to you on this one. They're under pressure in the session today. Sapna is looking for a buy price. Should she consider entering at these levels?
I would suggest to wait for maybe some more time. These stocks have just broken their key short-term support levels. I think indicator-wise as well, there could slightly be one more round of weakness which could come by for the Bajaj twins. So specifically, for example, for Bajaj Finance, I would suggest that if the stock comes back, say closer to 7,100 or 7,000 levels, that could be a good level where you can look to enter. And I think for Bajaj, FinServ as well, the levels on the downside could be almost closer to 16,000 mark or 16,250 odd level. So you can look to buy, but I would suggest waiting for maybe some more time till the time these levels come by for both of these stocks respectively.
Okay, this one is from Chaitanya, and this one also is for you, Kunal. He's saying he's bought Colte Patil as well as Prestige, both 5% higher than current market price. So he wants to know whether he should continue to hold on to both of these, given that what we are seeing in the real estate space. He wants to know, or should he look to switch to some other counters? His time frame is about 1 to 2 years.
See, I think if you have invested for 1 to 2 years, then small rallies of 4-5% into these names could should not be a point where you could look to book out profits. There is a bigger trend which is evolving into these real estate names. I think the likes of Godrej Properties, Oberoi Realties, Prestige, Colte Patil, DLF, etc. These stocks are looking very strong on charts. And also remember that in the last 1 month, these stocks have already gone through a correction of 15% on an average for these names individually. So I think that's also a good indication that the froth seems to be out, and you would probably see these stocks stabilizing and maturing back into an upward trending mode. So I would suggest a hold, specifically for time frame is 1 year plus for both of these names.
All right, let's take another question. AFL is the counter that we're speaking about, and Anup Gowda is asking whether it can be bought at the current market price for the short term. Kunal, I'm coming back to you on the charts. How does it look? Can it be bought at the current level?
Well, it can be bought at current levels. In fact, what the stock is also showing right now on the charts, Alex, is a bullish golden crossover, which indicates that in technical terms, the 50-day moving average has crossed back above the 200-day moving average. Now, this generally happens when you see strong reversals and prices getting back into an upward trending mode. So I would suggest in that sense that it looks attractive, and the stock has come back to a mean reverting point as well. So both on the bullish golden crossover as well as the stock coming back towards a mean reverting zone should be a good level to enter.
All right, this one is coming in from from Syed, and he's saying that he's bought SRF at 2300 levels. He wants to know whether the charts are showing an upward momentum for this counter, or is a downward momentum. Which one is that, Kunal? Would you be able to help Syed with SRF?
Change for SRF, was I remember answering this query I think last week as well when someone had queried that SRF could be a good long-term buy. I specifically mentioned that I think the stock is getting into a short-term corrective for way. The MACD, for example, has converged on the downside. You're seeing the stock just hanging around the 50-day moving average, which I believe over the near term should be broken down. So I think a better entry point for SRF should be on the lower side. At least wait for another 5% correction, if not more, for SRF. That could probably take the stock closer to 1750 odd levels. So I would suggest a wait on SRF. Don't need to jump in at current levels. Wait for another 5% correction. That could be a better level to try and chip into the stock.
Next question on PVR. We've got Padma Balan, who's got this counter at levels of 1510. Should you hold or switch for the medium term is the question. Ashish, can you hear me?
Yeah, okay, I can hear you. Yeah, I didn't. Okay. So PVR, I think the stock has run up a lot. I mean, it's really gone way ahead of, I think, the fundamentals. We are not bullish at all at this stage, and I think, frankly speaking, there are better bets available. Within the cinema exhibition space, also Inox Leisure presents a better opportunity and better valuation at the current price to trade in. So if it really has to remain in this cinema exhibition space, then also I think Inox Leisure presents a better opportunity.
Okay, this one is coming from Ramalinga, and he's saying a year ago he bought about 50 shares of Bandhan Bank at 350 rupees per share for with a 3-year horizon. He's saying 1 year has passed, but I'm in huge loss now. He wants to know how did the fundamental change for Bandhan Bank. Now he only has 2 years of his investment of the holding for Bandhan Bank. So what should he do? What's your take, Ashish? What has actually changed for Bandhan Bank? Ramalinga Raju invested about 50 shares at 350 rupees per share with a 3-year horizon. More 2 years to go. What should he do with Bandhan Bank?
Well, actually, nothing has changed. In fact, I think as we are, progressing, things are improving, and even for Bandhan Bank, I think things will look better. There was a lot of fear of NPAs. To some extent, they have really got removed now with the economy coming back and with the commercial activity picking up. I think the smaller banks, whether it was Bandhan or whether it was RBL or whether it was IDFC first, there was a huge apprehension, and that's why the stocks really get into a corrective phase. 350 really looks quite high because I think you somehow managed to maybe get a peak at some level. But if you have 2 more years, I think stay invested. You will certainly get much better. I don't know whether it will cross your purchase price. Difficult to say, but definitely it will improve from here. Next 2 years, I think the corporate facing banks look very interesting space. So stay invested. Certainly you will get a much better rate than the current one in the next 2 years.
And on that note, we're at the end of this edition of the Query segment. Thank you so much for taking the time. And Ashish, wish you and your family a very, very happy Diwali. Kunal, we'll be seeing you more often. So we'll hold on